Morning everybody, welcome to Stockradar Stocks in the Move for another week. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, last week I talked about the trend intensity indicator, and this week I want to look at the four indicators that make up, that are built into one trend intensity indicator rating. So, and why I use them and how I use them and why they're so important to what I do. Okay, so we'll go through that a bit later on. But firstly, let's get into the trend intensity ratings this week. Okay. ALQ at the top there, ASX doing okay. A little bit of a jumpy week this week, so these are ratings from last week, but all still pretty valid. Brambles is still making new highs. Coal's come back a bit this week. EMR has with some of those metals. So they've had this sort of second bump down, which is a little bit more of a worry. Harvey Norman's been doing pretty well. Pruis is one of the goals, okay, that's coming off a little bit. Stockland, VCX are both doing well, and there's RRL we've got to watch as well. So there's a couple we've got to watch there, but there are actually about 17 stocks with TIRs of 10 this week out of the 34 stocks we hold, which is 34 stock picks of 158. So that's a pretty amazing figure there. So there's some really strong stocks in this market and some really weak stocks. It's a funny old market. Even when I look through the top 10 there this week, there's some have gone up, some have come down pretty sharply. It's quite a weird world we live in, and we see what's happening with the Nasdaq and the Dow. Huge dumps down over a month or so ago. Then we've got this last month, which has just been a huge rally up towards the highs. So it makes it very hard, and in those sort of situations, you've got to be a little bit careful because the trends aren't clear. Okay, apart from the 34 stocks that we have there in our stock pick count. So we've actually accumulated 8 stock picks. There's 4 this week and 4 last week. So we've picked up 8 because we were down to a low of about 20 stock picks. So we've picked up a few the last few weeks, and they're all doing pretty well. Okay, so that's the trend intensity rankings and stock pick count. Portfolios are solid and full because we've got picked up a few more stocks. And so let's go now to the overseas markets and look at the Dow. These rallies have been pretty impressive, although the volume sort of tapered off a little bit with some of these rallies. So although the Dow is moving back towards its highs, we're really in mid-range at the moment, and a little bit of a concern because we had a huge thump down, a quick rally back. My only confirmation really comes from a new high. Before that would happen, it's a very doubtful situation, as resistance can still turn back prices. So I'm really only looking for a new high in all these indices at the moment. It's a bit hard for me to tell this. Again, the volume, compared to the selling volume on the downside here, the volume on the upside, even the Nasdaq, although the gains have been good, still the high is really my barometer as to this rally is going to continue or not. And the same with the S&P 500. It looks okay. It's rallying strongly. No doubt about these advances, but we've got to get that new high across there. So we've got above the moving average here. Momentum's pretty weak on all these indices still, so it's still below zero. So fairly negative. And the volumes are sort of a bit mixed. But again, compared to the selling, perhaps not quite as impressive. So we're still on the cautious side at the moment with these indices between these two significant highs and lows. Now, our market has also made some good gains. We've had the metals pushing us a little bit, which might be tapering off a bit now, I don't know. But again, we're in that mid-range again, where we've got no real trend, but between that high and that low, and it's very difficult to say. We've got the momentum index down the bottom there, making us very cautious about what's happened. So this is not to be ignored. This pull back down here from about 1,000 points off. Pretty quickly, 8.6 to 7.6. Okay, that's the ASX 200. We go to gold. Still okay. I think it's come off a little bit last night, but again, it's holding up pretty good to me at the moment, or pretty well to me, good English. So it's above the average, it's above the trend line, and it's going okay. It's weathered some pretty heavy selling through here, and still holding up, which is pretty good. Momentum's still good, and the average is still pretty good. So the indicators are all still positive behind the trend for gold. Okay, copper again, still it's chopping about a bit. It's still trying to rally. We've got a few long tails here as the market's getting pushed up, but also we've got this huge resistance at the top here, so we've got to be a bit careful of this. And it's just one of waiting. Some of these situations, there's the times when I get my beautiful uptrend phase and all the alignment of the stars and my indicators. They're very rare thingos, so very rare occurrences, I should say. So situations like this, you really just have to wait until all of a sudden the picture becomes clear and you get you get volume, you get moving average, you get momentum, and you get price action, all convincing us of the trending attributes of a stock or a commodity. At this stage, we just don't have it with copper at the moment. And again, Brent, we do, but it's on the downside, unfortunately. It has had a rally the last couple of weeks and is rallying this week, but still the pressure is still down here. The prices are going down, the average is down, volume is heavy, momentum's weak, so there's really not much to hang on to there for crude. Okay, so that's the portfolio, the overseas markets. Now we go to finding the right stocks, which is what we're always trying to do for you. And we focus on those stocks that are trending up, and there's not that many of them at the moment, but what we are going to show you a few today that we look. Now, I operate money in the ASX 200 because I find that a very safe place to operate. I also find it a very good place where price analysis responds very well to these very liquid markets. Very hard to manipulate and push around, as in the smaller stock area. So these stocks that I trade in that safety zone, as I say, of top stocks, often yielding well, which is a bit of a bonus, and often responding very well to price analysis and hard to manipulate. So that's where I operate from. So I look at some of these leading stocks, I look at Wesfarmers, and you've got to look at these individually because they're all a slightly different picture. Now, Wesfarmers is making new highs again and looking fantastic. It's above $80 again now. We had a bit of a correction through here. We took some profit. We locked it in. We've now gone again because this is rallied higher, and it looks like we're going to be able to start raising our stop from here as this starts to push higher, and we can see some really nice volume here, and not enormous compared to the selling here, but it's still good enough to get it moving. We're above the average, and we've also got momentum ticking higher as well. So we get a good trend intensity rating of +9 on Wesfarmers. Keep your blinkers on, follow your stock-specific analysis, and you'll be okay. Okay, Telstra Group came off a bit yesterday, I know, but we have had some mighty gains over the last couple of months. Seeing from back here and back in February when we were down around sort of 380, we're now up around 460 or come back to 450 this week. But some very good gains with some very small pullbacks. So this is not an unusual thing. It's actually probably a good thing. And now I'm going to see how the buyers respond to this sort of pullback, see if they come back in and support the stock and rally it again. So it's a good developing trend. There's been some great volume through here. The momentum's been good. The moving average probabilities are good. So everything there is aligned, and we get a trend intensity rating of 10 for Telstra. The trending attributes are all very compelling in this one here. Okay, another leader we've got, QBE, which I often show. It just sort of claws its way high, a bit like the snail and the hair. The snail just keeps drawing on. And even with this big move down here, it really, because it was we did close up here, this was sort of an opening price, which was whipped up here. So we really haven't had that much damage to this upward move at the moment. So it's looking pretty good. Trend intensity still rates a 9, but the average volume's okay. Momentum's kicking back into positive territory again. Still well above the 0 level, so the trend is pretty good. And it's a pretty solid trend we've got through here. So QBE has been attracting a lot of attention for a long time and is still attracting good attention. So that's a nice one. And on the other one, we've got here Brambles, which I've shown you a few times. Keeps clawing high, now starting to break to these new highs again, which is what we want to see. A little bit of volume here. Nothing special just yet, but supportive. The uptrend steadies, well above 0 again. So we've got that steady uptrend. And we're above the average, and it's rallying high. Trend intensity ratings +9. So Bramble still looks fine. And this big bump, it's been a slow crawl higher, and now looks like it's going to start expanding again on the upside. So that's a very good one from Bramble. So that's 4 good leaders, pretty safe stocks that I've been watching and are also doing very well for you at the moment. Now, as opposed to Aristocrat, I'm going to look at a couple more stocks here that are perhaps in a bit of trouble. Aristocrat, we had a huge, fantastic run here. We've taken our profit. We're out of the market. We've gone into an I don't know stage. We had a big sell-off here on some big volume here. We had a rally here on some light volume. And now we're seeing the sellers come back again. This is a real no-no, this one, the way it's behaving. Trend intensity rating is 0. It got up to there, but didn't really give us any signal there. So the selling really is a dominant thing here for Aristocrat. And trend intensity rating is 0 at the moment, but that'll probably weaken off next week if we start finishing down here. So Aristocrat, one to watch. I think lower prices are probably in the offering at the moment, so better opportunities elsewhere, or wait patiently for Aristocrat to come down a bit further. Pro Medicus, another one which has rallied mighty strongly. We all love stocks like this that move so well, especially if we're on the right side of them. And if we're not on the right side of them, when it comes down from like about 280 to 160. We're not that happy. Also 190 here. But it did shake us out because we had a big profit here to protect. So we protected that profit, took it out, and now we're in the I don't know stage. Now it is rallying this stock. But I've got to say, when I look at what's happening here, the selling volume was very heavy, and this volume here on the upside fairly light. So I'm not impressed at this stage at the moment. I will be impressed if it starts making a new high, because that's my signal for the trend to continue. And these things can change down here, but for the moment I stay neutral because that's a signal. My trend intensity rating is still 0. It's come up from about -4, -5 down here, but it's still not giving me a rating. It won't do until this high goes, if it goes at all. So keep an eye on that one. But they can come back very quickly, these stocks, so we've got to be very careful. So that's Aristocrat, Pro Medicus. Nice stocks to if you're in the right way, but you don't want to be in the wrong way there. And at the moment, they're looking a little bit wary. Xero is another stock here that's also looking pretty interesting. It's had a very big long-term uptrend back up here. It broke to new highs, and then when we had our Trump tariff problem, it came back pretty sharply, not knowing what was going to happen. So we got moved from about 185 down to about 145, which is a pretty sharp move, and some selling. But now we've got the buyers have come back in here. In this instance, the momentum indicator has stayed above 0, which is a good sign. It's come down pretty badly, but that's not such a good sign. But being above 0 is a positive sign. The volume is looking better, and it's now started to move above the average. So again here, we really need to wait and see if we can get through these highs. That is the real litmus test for a lot of these stocks as to if they're going to continue high. So keep an eye on those ones for Aristocrat, which doesn't look anywhere near its high. Pro Medicus is heading towards it, Xero is heading towards it, so it may run on further, but we don't do anything yet until that occurs. Okay, so now I want to have a look at just a couple of metal stocks for you. We know that they've come back. They've had this is the second jolt we've had in a few weeks. So we've got to be very careful with these ones. And you can see here, this is Genesis Minerals, which has been very kind to us for quite some time. We had a very good trend here from 170 to up to nearly towards about $4, $3.80 at the moment. So we've got to protect this trade. The simple thing is when this happens, when these markets come back, you wonder what should I do? And what you should do is see where your stop loss is, and I'll be waiting for Friday night to occur on Genesis Minerals because it's very near its stop loss to see whether it closed above or below. That will be the test for me. If it closes below, I get out. If it closes above, I stay in and hold for hopefully another rally. So we've had some pretty good volumes down here, but we may be coming to an end of this rally. There's a few selling bars come through here in the last couple of weeks. Can't get this right. A couple of selling bars come through here, and this week as well, it's a bit of selling there. Momentum is still strong, moving up to okay. So the rating is still positive here, but again, what overrides all in this situation is, of course, when we're in a position, our stop loss is the most important thing. So not the price analysis. The price analysis gives us a guide, but it's actually the stop loss which will say, well, do I stay in this or not? So, and in these situations, if I do get out of here and it goes up again, I just buy a new high. That's the strategy. That's how I work. I protect my profits if it's going to go down, and I stand aside until I either get a trend reversal from lower levels or a new high occurs, like it may occur with Aristocrat, or probably not Aristocrat, but at least Pro Medicus and Xero possibly. Okay, so that's how I look at Genesis Minerals. I'm going to wait to see where it finishes the week compared to my stop, and that's when I make my decision. Same one with Regis Resources. You know, these are lovely stocks. We've had a lovely time with them. We want them to go further, but they won't necessarily go further. We have the resistance up here at Regis. Now, this would have been our natural resistance level, up around $6, which is the old cycle high there. So we've had a very, very fast and furious rally through, which has been very lucrative for us, but we do have to put a stop in. We don't just set this as a target and say, well, it's going to get there. It may not get there. It still may, but it's also coming off at the moment towards its stop, and we'll be keeping an eye on that one. Trend intensity rating from last week was 10 because it made a new high last week and looked very good, but we do have a stop down here, which we're watching very carefully. All these technicals are all very good. You can see a little bit of selling sort of appeared here. The buyings will taper off a little bit, so a little bit of a change in there, but the stop loss is our ultimate litmus test there. Okay, just a couple of new possibilities for you. Again, we talk about new highs. Now, Qantas came off pretty sharply when the Trump tariffs hit. the noise of the Trump tariffs hit, but it's back on the up again, and it's actually making a new high this week. So it's been incredibly strong, Qantas, and it surprised us all. So apart from this blip here, it's really back at its highs again and looking pretty good. Now, volume hasn't been sensational here. Momentum's above zero, and it's holding okay, and it's holding above an average, which is now rising. So trend intensity rating is +1. If it closes above the resistance level this week, it will get a positive rating and qualify for an entry next week. So Qantas is one to watch, and again, believe it or not, if you don't worry about the price levels too much, you worry about the price action. That tells me what to do. If I write about the price levels, I think, gee, was $5 in April last year. It's now $10 in April this year. That's a huge gain. Can it go further? Well, of course it can. As we know, trends extend on the upside will. And with this sort of behaviour, it's very bullish indeed. So Qantas still looks pretty good. We've got ResMed, which has been just teasing and taunting us around these highs, but just hasn't got through. But now here we go again. Like a lot of the stocks, they're rallying strongly. Volume's tapered off a bit here. Momentum's pretty neutral, slightly in the positive area. So if it does break to a new high here, it will trigger a positive rating. So we'll just have to wait to see what happens here. But it's very close. It's $37.90. The high's up around $40. So ResMed's certainly one worth watching. I know a lot of people are very bullish long term on this stock. The fundamentals apparently are very good. So we just need price to confirm that, and then we can catch the wave on ResMed, hopefully, if it makes that new high. So that's a very simple one. Again, Qantas is simple. Lottery Corp's another one, which has been, it's been below this area, 520, 530 for a long, long time, for its whole trading history, in fact. And we've got this slowly upward bias here of buyers. So it's really been a slow pattern developing here, but it's now starting to push the upper end of the envelope there. Hasn't got through yet, but we've seen a couple of good weeks of some very strong buying push it through here. And the momentum's starting to spring to life again. So again, trend intensity rating of +2, it will go to a qualifying rating if it closes above. I think it's around about 532, 533 this week. So there's another one for you to have a look at. Keep an eye on, because this is a very, very significant resistance level. If it gets through it, the odds are it's going to go for a run. Not necessarily guaranteed. That's why we work with this stock, but the odds suggest, that that's what will happen. Okay. The next one, coming off a low base, I think I might have talked about this one before, is Fletcher Building. It was a very lucrative one for a long time, and it's amazing how stocks go up and down. But it was a stock that could do no wrong for such a long time, and then all of a sudden it hit the top at 750 and ended up at 250, which is a mammoth fall from grace. Anyway, that's what's happened, and Fletcher Building now is trying to rebuild its fortunes. We've got the downtrend here. We've got an accumulation phase going on down the bottom here. Are we entering into an uptrend phase? Well, let's just have to blow this up and have a little bit of a better look at it. We can see this bottoming phase. Down here, we've got a good base here across about 250. It's now starting to make higher lows here. We're starting to push some higher highs across all these peaks through here. The resistance is up around 320, something like that. And we've also got some very nice volume starting to occur through here, and the momentum indicator is starting to get above zero and turn positive. So we are getting an alignment of the stars, like I talk about. It doesn't happen very often, but when it does happen, and you get this sort of picture, this sort of price action, you get this sort of volume, you get this sort of momentum turn, then the odds are that you're going to get a good break and a good run. So we keep an eye on this one. We play every one as we see it. They don't always work, but when they do, they work very well, and it's a matter of being right more often than not, and that's what we do most of the time. So downtrend, accumulation phase, and back to uptrend for Fletcher Building. Okay, so that's all the stocks I've got for today. There's quite a few bits and pieces in there, some leaders, some opportunities, some ones to stay away from. So it really is a very mixed market. Even as I go to that top 10 this week, there's a couple of mixed behaviours this week. Some down, some up, some on high volume, some on not. So it really is a very select situation as far as checking the stocks that you are going to be involved in. Okay, so now I just want to talk a little bit about the trend intensity indicator again, about why these four indicators are that I use, which is trend, moving average, volume, and momentum. They all help me define a trend, tell me what the attributes of a price action is, and they're all very basic patterns that have been used for many, many years, and they're very reliable. Okay, so our focus is on uptrends. There's cycle focus, downtrend, accumulation, uptrend, distribution, downtrend, accumulation, uptrend, distribution. It goes on and on and on, all in different shapes and sizes, which you've got to try and read. But that's our focus. So we want to focus on that period that goes from accumulation to uptrend. That's what we're interested in. So these tools are used to help us highlight these uptrend conditions, which is why I use them and why I put them into the rating. Okay, so high highs and high lows there. So a price pattern that moves in a wave of high highs and high lows defines an uptrend. That is my first stop of always. Okay, I've got to get that new high to trigger that possibility of a trend moving on. Okay, so the moving average, that provides probabilities. The probabilities, if the price is above the moving average, the probabilities it will go higher, and vice versa. So in my trend intensity indicator, if the price is above zero, above the moving average, it gets a positive rating. If it's below moving average, it's a negative rating. It ain't complicated, okay? Then we go to volume, okay, and we look at volume here. We like to see volume accompany price rises, not always necessary. That's why we use that weight of evidence argument or the 4 indicators, because some of the stocks can be short. Some stocks can be, it's hard to get a hold of great amounts of stock, and the price can move very easily. And that's an example of something like CSL that can often move quite fast. Back in the old days, hasn't done that for a while, but it used to move in quite low volume because people couldn't get a hold of a nice stock and would push it higher on low volume. But generally, I'd like to see volume accompany a price rise because it validates the move. It means there's good participation by the buyers. Okay, right. The third one is momentum. The fourth one is momentum, which highlights the price acceleration periods of a trend. So there are periods of a trend when a stock really moves fast, and we know that it can dally about and all of a sudden explode. And the momentum indicator is one that tells me this is likely to explode. When we start getting these lines starting to separate and this histogram starting to rise, means that the shorter term moving average is moving away from the longer term, which often is a precursor to a sharp move. So that helps us. We identify the trend. We try and identify the power of a trend when they're likely to move. So we've been lucky enough to get on the Prometheus, get on the computer shares, get on some of these stocks that have been going really well and have moved really well. Next DC, which come back a long way, but had a fantastic rise. And they're the things we want to get onto. Okay, so that's why I'm using these 4 indicators basically. These are all tools to help us identify and evaluate uptrends. It's really all I do. It's all I want to do, okay? I'm looking at dividends, I'm looking at profit and loss, I'm not looking at budgets. I'm just looking purely at price trend and these 4 indicators, okay? So the trend intensity rating is a tool that takes the emotion out. It provides perspective for us using a weight of evidence calculation to guide you. Okay, so it's always rating a stock and its trending capabilities, and it does it in a very mechanical, objective way, which is very good. Okay, so we end up, the 4 indicators are combined and weighted into one rating, okay, which goes between +10 and -10, and here's the scale. Now, all we're really interested in is from +4 up to +10, because that's telling me the trending capabilities are starting to build. Below here, I have no uptrend capabilities, attributes, so I stay away from the stock and I stay neutral. Okay, so you see the green and the red lines through all my trend intensity tables, from high to low, and that's from the strongest trending to the weakest trending down the bottom there. Okay, so the rating of 4 or greater tells us the behaviour of the 4 indicators are often compelling trending attributes, and they could get better from there, because often the trend intensity rating will move from one end of the scale to the other and back again as these cycles behave, go from distribution, downtrend, accumulation, uptrend. These moves the indicator through its extremes of scales from -7 to -10 to +10 to +7, and it often happens. So when it moves up from things like from neutral up into 4 to 7 area, into the green area, I'm looking at a trend starting to begin and starting to build. Okay, a new high will more often than not attract a maximum rating because it'll be above the average and the momentum will probably be positive. But with a trend reversal, it's a little bit different. So when you see it move from neutral into trending up zone, that's something to watch for. Okay, and this is just an example of consumer staples stock trend intensity table. You can just see the ratings there, +10 down to -9 there for the stocks. You can see Coles, Westphales and ATM are all qualified. You can see the stock pick says yes, stock pick no for the ones that don't qualify. You can see the entry date, entry price, current entry date, entry price. You can see the current price. You can see where the stop loss is or the reversal level is, and the profit and loss, and any comments there. That's all the information you need to trade a stock, okay, on the basis of what I do. Okay, so that's just an example of a table and how it looks and how it works. Okay, so that's about all I've got for you today. I just wanted to go through that trend intensity indicator, try and help you understand why I do it. And it's not a holy grail thing. It's really a matter of trying to play the odds all the time. No guarantees in any moves, just hard-nosed analysis. And if we're wrong, we get out. Okay, so the TI indicator helps us enter stocks, but what about the exit? The exit's another point. Next week we'll talk about the exit with regard to the why we do it this way and how we do it. Okay, it's all about having a complete and focused trading strategy from entry to exit to complete the thing. It's very easy to buy, not so easy to sell, because selling requires a big adjustment in your expectations, because you get out at a price, it can go higher, it can go lower, lots of things can happen, but you cannot worry about that. You just move on. Okay, so watch your trends, heed your stops. Keep it simple, stay safe, have fun, and of course I'll see you all again next week. Thanks very much. See ya.